So the crypto market is under immense pressure, and this may have serious implications for Dogecoin. In this video, I'll talk about where Doge is headed from here along with some important updates. But before coming to it, let's take a quick overview of the overall crypto market. So after showing some strength after last week's flash crash, the crypto market is down again. The overall crypto market cap is now down by almost 5%, just short of the $2.2 trillion mark. And the total crypto market volume over the last 24 hours is around $123 billion, which makes a 7% decrease in the same period. Meanwhile, Bitcoin is now struggling to maintain its position above $48,000 as its price has dived below to touch the daily low at the 47K level. And it appears that Bitcoin is currently in a dangerous position, and if a breakdown occurred again, the downside momentum may gain traction with the next focus on the 45K support level. However, there is still a silver lining for Bitcoin as its technical analysis reveals that Bitcoin may be ready for an upside movement if the relative strength index crosses above the 40 level. And now coming to Ethereum, it was trading well recently, but it appears that the overall market pressure has affected it as well. Ethereum started a major decline in the last 24 hours, and it is currently trading below the 4K level. But the good thing for Ethereum is that it is now gaining a new use case in hedging against Bitcoin's wild price crash. Although Ethereum's price has plummeted in lockstep with the rest of the market, it has reached a 3-year high in comparison to Bitcoin. The ETH and Bitcoin trading pair has grown by almost 11.5% in the last 24 hours, reaching 0.083 for the first time since May 2018. As a result, Ethereum's losses to Bitcoin have spawned a new narrative in which ETH is being utilized as a hedge against Bitcoin's flash crash. And since investors are now utilizing Ethereum as a safe haven against Bitcoin, it is highly likely that it will not gain further losses and will look to gain some traction in the coming trading sessions. And with that being said, let's come to Dogecoin's price analysis. So despite bouncing 10% from the last week's low, Dogecoin's price failed to recover its long-term uptrend, suggesting more downside this week. It is down by 7% in the last 24 hours and is currently trading around the 16 cents level. Furthermore, at the current price, Dogecoin has lost by 8% in the market cap. As a result, it is now out of the top 10 cryptos in terms of market cap and is currently sitting at 11th place. In addition, Dogecoin's daily chart shows that it has broken below long-term trend support at 19 cents, and it is now acting as a resistance level. And it appears that the bearish momentum will continue as long as the overhead resistance is intact. However, the good news for Dogecoin holders is that Doge still has the potential to clear this resistance level. And if it manages to close above trend resistance, it would flip the outlook from bearish to bullish. And in that event, Doge will advance to the 20 and 24 cents price levels. On balance, I expect the favorable scenario to play out for Doge, considering that the overall market sentiment is still optimistic. And I'm saying that the market sentiment is still optimistic because the crypto market's latest crash is stirring up investor interest in buying the dip. As per a recent report by crypto insight firm Sentiment, major cryptos are gaining support now as a result of the largest level of buying the dip mentions on social media since early September. Sentiment says that with the exception of 3 decentralized finance-focused coins, the entire top 100 crypto lists suffered severe losses on the day of the market crisis, which saw the crypto market lose about $600 billion in terms of market cap. But the good thing is that investors took this as an opportunity to buy the dip for long-term gains. So as we are seeing that investors want to buy the dip and gain in the long term, I think that it is a major bullish indicator for Dogecoin and the overall crypto market. Meanwhile, it is key to note here that the ongoing crypto market downtrend was mostly caused by the new COVID variant concerns, which also impacted the stock market severely. So the key thing here is that these concerns will fade out eventually. Hence, I think Doge is going to rebound in the near future along with the overall market. In any case, where do you think we are headed from here? Do you think that Dogecoin can rebound from here? Let me know in the comments section below. And with that being said, let's see some important crypto updates. So Gary Gensler, head of the U.S. SEC, has recently urged for increased investor protection in the crypto marketplaces. He said that in certain cases, the crypto sector is riddled with fraud, scams, and misuse. and investors frequently lack access to thorough, unbiased, and comprehensive information on tokens or trading and lending platforms. Gensler continued by stating there is a lot of certainty on whether crypto is a security or not. He then added that many tokens in the crypto exchanges are unregistered securities, lacking required disclosures or market monitoring. The SEC chairman closed his remarks by urging crypto platform operators and token issuers to come in and speak with the SEC. Seeing these remarks, I think that this is a good development since the SEC chair wants to eliminate the uncertainty involved in the crypto space, and he appears to be open to having a discussion with the crypto firms. And talking about crypto firms and exchanges, the latest development is that crypto exchange Binance is aiming to expand its operations in the United Kingdom after the country's authority ordered it to cease operations earlier this year. Binance recently stated that its primary objective is to register as a crypto asset corporation in the United Kingdom. The move would enable the world's largest crypto exchange to expand its product offering. However, it will not be smooth sailing. For example, it must surmount British anti-money laundering regulations that have hampered the business. But if successful, Binance will be able to offer futures and derivatives in the region, which will be a good thing for the crypto industry. Meanwhile, Ritholtz Wealth Management and WisdomTree Investments are collaborating to establish a crypto index fund. Apart from WisdomTree, Ritholtz teamed with crypto exchange Gemini, as well as crypto asset management business on Ramp, to facilitate the launch of the new crypto index. The new index, dubbed the RWM WisdomTree Crypto Index, is composed of 36% Bitcoin, 20% Ethereum, and 4% of 11 other crypto-related assets held in a separately managed account. Additionally, the index exposes investors to decentralized finance and the metaverse via SushiSwap and Decentralized, as well as Layer 2 protocols and oracles. All in all, this crypto index aims to enhance users' exposure to the crypto-related funds, and I think this is going to boost the broader crypto adoption. And talking about crypto adoption, Alex Mashinsky, the CEO of crypto lending platform Celsius, believes that Bitcoin lacks the necessary characteristics to be a viable payment option. In a recent interview, Alex Mashinsky emphasized that using Bitcoin to pay for products and services is not a smart idea, as those who have done so in the past frequently regret the transaction. He said that if you purchased a Tesla for 2 or 3 Bitcoins, you obviously despise driving that Tesla, as you would immediately return those 3 Bitcoins for the Tesla, which lost value at the same time period. However, the point to note here is that Alex Mashinsky is only against Bitcoin being used as a payment option, as he believes that Bitcoin can thrive as an asset class. And as per another report, trading volumes on prominent decentralized exchange aggregators have soared to new highs over the last several weeks. Popular decentralized exchange aggregators such as 1inch, 0x, and Paraswap have seen a surge in volume during the last month. In addition, the aggregate volume of those 3 decentralized exchange aggregators reached a cumulative weekly all-time high of $6 billion last week, an increase of over 50% from the beginning of November. Moreover, trading activity on decentralized exchanges was calculated at around $4 billion in the last 24 hours and a whopping $33 billion in the last week. So it is quite clear that users are now preferring decentralized exchanges over centralized exchanges, and these numbers are expected to grow more in the future. And now coming back to Dogecoin, I have mentioned in my previous videos that Plan B's S2F model is still intact amid the recent market flash crash. And as per Plan B, Bitcoin may not hit the 100K mark, but it will gain some traction and go as high as $60,000. And if Bitcoin manages to do so, then Dogecoin will do the same, since its correlation with Bitcoin is very high now. It is currently sitting around the 0.98 mark. So it is clear that if Bitcoin rallies up, Doge will also gain traction, and this will bring an end to the bearish momentum for Doge. All in all, I'm still optimistic for Doge, since everything leads to a bullish scenario for it. In any case, what are your expectations from Dogecoin? Are you still hopeful for Doge and believe that it can rebound from here? Let me know in the comment section below.